Hello everybody, welcome to this earnings season's preview. My name is Soren Otto and today I am joined by our Head of Equity Strategies, Peter Garnery. Hi Peter.
Hi Søren.
As I said, today we're going to discuss the earnings preview. We're both going to talk about what it is in general and also look at the upcoming Q3 earnings report. And Peter, let's just get started. As a first-time investor, could you try and explain to me what the earnings season really is?
Yes, so all companies in the world report their earnings result during the year to their investors, the shareholders. And in some countries it's quarterly, in some it's only 2 times a year. We actually have earnings releases almost every week across the entire, during the entire year. But the earnings season is defined as sort of most of the companies in the world will follow the calendar year. And the earnings season is really, the congestion of a lot of earnings. So we'll have hundreds of earnings from the big companies around the world over a very short time period of 4 to 6 weeks. And it always follows a couple of weeks after a calendar quarter has ended. So right now we sit here in September, and that means that the Q3 earnings season for this year will start in mid-October and then really run over the next 4 to 6 weeks.
So if you follow business news and financial news outlets, this is something that gains a lot of attention. But why is that really?
Because if a company reports quarterly, we have had a gap of 3 months where a lot of things have happened in the world. Interest rates have moved, the dollar has moved, Russia launched a war against Ukraine, whatever it is, they have these events. So we don't really fully know how all these events impact a specific company, but we try at least. That's what happens in markets, so share price will change. And then we get the earnings result where we can then update and calibrate those expectations. That's really why it's such an important thing. It's also an opportunity for the company to come out with a changed outlook if things improve compared to just 3 months ago, or come out with a good story, or in some bad cases come out with a very negative and they maybe do a profit warning. That's typically what garners a lot of attention in media, because that's always quite a shock.
In terms of this calibration you talk about, one of the things that's always looked at is analysts' expectations of a company's performance. And I think it's fair to probably recognize you as an expert within equities and market performance in general. So what do you look for when you start preparing for an earnings season and when you go through it?
Yeah, so this is, I'll try to keep it brief because it's actually a little bit of a bigger story here. So the US financial industry has been extremely good at marketing this idea of earnings per share. So earnings per share is sort of the key dominant figure that everyone talks about. And that's also the key thing that all analysts are providing to Bloomberg and Reuters. So we always hear about these. This is the consensus estimate for earnings per share. And then we always say, okay, Coca-Cola reports 89 cents per share and expectations were 92. So they missed by 3 cents. That's bad. But it's too simplistic to only look at the earnings per share. So everyone that knows anything about how to value a company would say that the revenue growth and the operating margins, so how much you have left for paying back interest on loans, etc., pay taxes to the government for a company so everything else, expenses on marketing and employees and the product you develop, when all that is subtracted, you have the operating profit. So that margin, so how much you have left from paying those expenses, is really the key thing together with the revenue growth. And quickly, we have a lot of evidence that shows that the most important metric for a company and also to gauge where we're headed in it, whether it's a good or bad direction, is the revenue growth. So I would put more attention to the revenue growth and whether that is exceeding or not exceeding expectation than just looking at the earnings per share.
So said in another way, we call it earnings season, but earnings isn't really the only thing that you need to focus on here.
No, it's I think most individual investors, Saxo's clients as well, they should be in the game of having a very long time horizon when they do investments. They should think themselves as long-term shareholders. You buy a company to hold it for the long run. And that means that when you have these quarterly earnings releases, you get in more information, you get new information as a shareholder. How are things progressing with revenue? And the reason why that is so important is it goes back to whether you have a product that really sells in the market. And it's also key to note, so let's say in the consumer industry you have Nike or an Adidas, etc. These are competitors. It's very important as well to say, okay, if I'm a shareholder of Nike, is Nike actually outperforming Adidas in the recent quarters in terms of revenue growth? That would give you an indication that the offering and the price mix, etc., is better for Nike than Adidas. And as a shareholder, that would be very important to have. And I think that's some of the things. Think yourself as a shareholder and look at the company more than just the simplistic earnings per share.
Yeah, so in regards to that, there's something I would like to stick with a little bit is the idea of sectors. Because I know when you look at something like the earnings season, you look at it through sectors. And maybe you can just explain a little bit what a sector is, and then also the idea that I guess it's comparative within a sector. It's important to look at different measures and what happened there.
Yeah, so the regular listener and reader of our equity notes will know that we like to see the equity market through theme baskets. But when it comes to the earnings season, there's a very strict methodology, which is coined by MSCI, which is a very big index provider to the world. They have almost a monopoly. And they have something called the GICS classification. And inside the GICS classification, they have defined the equity market into 11 big sectors. So it's the energy sector, it can be consumer staples, so that's food companies, tobacco, etc. You have consumer discretionary, which is car companies and fashion. And you have the telecommunication services sector, which is where you have telecommunication, but also media and entertainment, which includes companies like Disney and Facebook. So those are the sectors, and that's the way we look at the earnings season, which sectors are doing good and which are doing bad.
And just sort of a short clarification, because these sectors are mainly, you can say, equity or share focused. But are there any other financial products that I could hold as an investor that I should focus on the earnings seasons with?
Well, in recent years, I would say that there have been a lot of attention on options, because what happens, let's say you have a much more short-term horizon going into the earnings season. The good thing about options is that when you go into a specific earnings release, most is already priced in. There are some expectations. You have some share price performance that you have all these things. It determines an option price. And the good thing about, let's say you say, I think this company could be Apple. I think they will actually surprise to the upside. I think they had a better quarter than what the market is really priced in. And then I can look at a call option with a very short maturity, and you can go long that. And the good thing for investors doing that is that the only thing you can maximum lose if you're really wrong is your premium on that call option. So that's one of the instruments that has been extremely popular also among individual investors.
And obviously also for the more complex or sophisticated investors, as we could call it.
Yeah.
But now let's try and shift our attention from earnings seasons in general, and then go to this upcoming Q3 earnings season, which is going to kick off shortly. As you said, we're in late September right now, so obviously things can change. But and you also mentioned this idea that earnings are actually coming in every day, more or less. But when is this season really kicking off?
Well, mid-October, we always start with U.S. companies. I don't know actually what the reason is, but U.S. companies are always earlier on than European companies to consolidate all their financial statements and get the results out, and specifically the U.S. financials. So we always start with the U.S. financials. We have a few in Europe, and then the following weeks you really see an acceleration in earnings from technology companies, industrial and consumer-oriented companies, and energy as well. And I think the theme and focus in this Q3 earnings season is really is two themes. You could argue it's three, but the first one is we know we have a cost of living crisis in the world. So there's a lot of attention on consumer discretionary companies, so car companies, fashion, etc. The other one is the energy sector, because that was by far the best performer in the second quarter, because we have very high energy prices. And then the overall theme, that's the third one, is that we saw in Q2 that companies' profit margins actually came up. There was a positive surprise to that, and that's because a lot of companies were slashing and cutting costs in the first quarter and the second quarter as well. And we think here in Q3 that because of these rising input costs from commodities, but also increasingly from wages, because employees, they are fighting back because of high inflation. They want to try to offset this inflation by getting higher wages. So we think there is actually an ongoing profit margin squeeze, or not squeeze, a compression, if you will, that will be the big theme here in Q3 and will surprise, we think, investors to the downside, unfortunately.
So the expectation is that it probably won't be the most positive picture we see in the earnings report if you were to.
No, I think the pressure is mounting. I think we're seeing more and more messages and communication from specifically consumer-oriented companies that it's increasingly getting difficult to pass on all these rising costs to the consumers without really beginning to hurt their sales in terms of quantities that they are selling, and that would be very bad for revenue. So you're seeing these signs and signals. Also, press releases that companies are preparing their shareholders that they will begin to absorb more of these rising input costs out of their profits. And if that's the case, then it's not really going to be very good for shareholders and profit growth.
So if we look at the last quarter, something like consumer staples and utilities were one of the at least worst performing or the best performing, however you want to put it. And with a populistic word, what do you see should be the leaders and the laggards this time?
So we have these 11 sectors that we talked about, and you can actually, and that the MSCI is doing that, you can put these 11 sectors into two groups. There are the cyclicals and then there's the non-cyclicals. When you have a shift in the market like we have now with rising interest rates, a lot more uncertainty around whether we will slip into a recession next year, etc., what we typically find is that non-cyclical sectors are doing better than, so non-cyclical is doing better than the cyclicals. And the cyclicals we expect will continue to do bad. So consumer staples is a non-cyclical because it's a necessity, we need it. One of the cyclical sectors that have done well this time is energy, and that's because the cycle and the environment we're in right now is quite unusual. So you have a slowdown, and typically you would expect energy to be hit from this slowdown, but we have an inflation regime, and right now the inflation is coming from the commodity sector, including energy. So energy is really what stands out from this analogy that you should be playing on the non-cyclicals, and utility is also a necessity, and that's why it has been doing so well. So we expect these trends to continue in Q3. So also healthcare being a very non-cyclical sector, we expect that to do relatively better than the rest of the sectors.
So if there's any new investors or less experienced investors out there looking here and thinking that the earnings season actually sounds like an interesting financial event that they would like to consider optimizing their portfolio towards, or at least get some inspiration from, do you have, as the expert you are within the equity sector, do you have any ideas, suggestions, or inspiration for where to look and what to do?
I think the earnings season is actually fun, and it's very, very interesting if you're a shareholder, because it's where you get an updated picture from your company. I would say, though, with my experience, that everything that is put into an annual report or a quarterly report always comes from the pen of management, and they always want to paint a very rosy picture. So even though you're a shareholder and you believe in where this company is going, you should probably always divide the things that are coming out a little bit, divided by two, then probably that's closer to the actual truth. So be skeptical, take the new information in. Has it changed really the overall trajectory and the expectations that you had when you invested in the company? And then what I would say, I mean, this is a period where we have a lot of uncertainty, and for newcomers to the market, it can feel very stressful with prices coming down. I'm sitting here talking about earnings going to be bad. But I would say, as we wrote in our Q3 outlook, I mean, out of any crisis, there's always opportunity. And some of the themes that we really like, and you can find those on the Saxo Trader platform, under research, you can find our theme baskets. We really like themes like defense companies, logistics, green transformation, energy storage, the overall commodity sector. And then we like a country like India. India is really one of those bright spots, if you will, in the equity market in the past couple of months. And this year in general, there's a clear divergence where India is doing so much better together with Indonesia and Vietnam. And that's my main message. We could be in a period where it takes a long time for us to really get back to new highs and everyone is happy in the equity market. In the meantime, there are always pockets in the equity market that do well, despite you have a crisis. We saw that in 2008, we saw it during the dot-com bubble, and we see this time around. So it's just about finding those positive stories.
And I think ending on positive stories, I think we'll end it there. Peter, thank you so much for taking the time to come here and discuss the earnings season with me.
Thank you so much.
And thanks for all of you for tuning in. I hope this was informative and that you got a little bit more insights into how you may use the earnings season as part of your investment strategy. So my name is Søren Otto, and on behalf of Peter, everyone behind the camera, and everyone here at Saxo, thanks for tuning in, and see you next time.